Hi, David. Thank you very much for joining us today. How are things in Toronto?
Jimmy, we're doing great in Toronto. Beautiful day today and some signs that spring is coming.
Finally. David, 2022 was a year of many milestones at Denison, all of which were resulted in de-risking at the Wheeler River Project. And the primary achievement was the ISR field testing at Phoenix, which involved injecting the mining solution into the formation and extracting a uranium-bearing solution. And most investors will have no idea of the details which are required to perform such a test. Maybe you can just take us through a brief description of what that entails and also what the results were.
Oh, Jimmy, my pleasure. Look, I mean, the headline here is that the results were excellent. This was a huge test for our company and the future of our company. But to dive into it, really, we have to go back in time quite a ways, because this test, we call it the feasibility field test. And it's essentially a small pilot operation supporting our feasibility study. And of course, the test was in the field. So you guys get the name now. But really, this test, to be prepared for this test, it took years of systematic de-risking in the lab and in the field to collect information both on metallurgy as well as on flow rates and our ability to pump and inject solution into the ore body. And all of that information, as simple as I'm making it sound now, was accumulated through the end of 2021. And at that point, we were in a position to design this feasibility field test and actually take it through the permitting and regulatory process. And so that was really the beginning of 2022 on the FFT, was actually getting this test permitted. Now, what this test involved was us taking a part of a commercial scale test pattern that we installed in 2021 and using it to inject a live mining solution. So an acidic mining solution, similar to what we'll use in production, to actually go in there and dissolve uranium in the deposit right at the heart of our Phoenix deposit and recover our uranium-bearing solution. Now, of course, when you hear that, and we talk about this being a feasibility field test and similar to a small pilot, you have to first work at getting permission to do this. This isn't the kind of test that we could just do as if it was an exploration program. And so we did go and work with both our federal and our provincial regulators. So the Ministry of the Environment in Saskatchewan and the Canadian Nuclear Safety Commission federally. And this was a first for both regulators. Nobody has done this kind of test in the Athabasca Basin for uranium mining. And so the real first milestone in all of the work that we put in for 2022 was getting permission from our regulators to do the test. And we were really successful in doing that. Not only did we get approvals from both regulators, but we got them roughly on time with our project plans so that we were able to then carry out the rest of the process, which of course for this facility meant we had to go procure materials to actually set up the surface facilities necessary for this. And then we had to actually carry out the construction and the commissioning of these facilities. All of that in an environment where the supply chain was still actually quite under stress through the tail end of the pandemic. And all of it went very well with us commissioning the facility for the leaching phase of the test in the late summer, and us commencing and completing both the leaching phase and the neutralization phase in the third and the fourth quarter of 2022. As I said at the start, not to bury the headline, the results were excellent. We were able to prove up or either at expected levels or exceeding levels for all of our key operating parameters that we were looking to demonstrate with this test. So those are things like flow rates, the time that it would take to acidify parts of the well field before we would start to get to a rate of acidification where we could effectively recover uranium, and ultimately uranium recovery. You know, the back end of this test and the headline was that we recovered over 14,000 pounds U3O8 in solution from the operation of this small part of the test pattern of for only 10 days after we achieved our target acidification. So that was really a historic accomplishment. I mean, the first pounds that have been recovered from ISR Mining in the history of the Athabasca Basin, done by Denison, and highly successful when it comes to being able to actually prove up our parameters. And that was really leaching. The next phase, a little less glamorous, but equally important from a regulatory standpoint, was neutralization. And that process also went very well. We were able to carry out our neutralization phase in accordance with our plans and return the ore body into an environmentally acceptable level from a pH standpoint in a relatively quick period of time. And those two phases were critical to collecting information that'll feed into our feasibility study. At that point, we did stop field activities, and we've paused for winter with a volume of stored solution on surface, and it's cold up in the Athabasca Basin, so most of that is frozen. And we'll resume the final phase of the test, which is our recovered solution management phase. And this is really a compliance phase. We're going to resume that in the spring. So no critical information coming out of this phase, but a phase necessary under our permits to basically proceed to reduce the amount of solution we're storing on site and start the process of reclaiming the facility after the test. But all in all, really an excellent outcome for us in the field, proving up all the metallurgical work we've done in the lab with all of the pump and injection testing to tangibly demonstrate that ISR Mining works at Phoenix and can work in the Athabasca Basin.
Like I said, I knew there was a lot of detail involved, and I'm glad you gave such a detailed explanation. Thanks for that. And David, now that you've proven to shareholders, stakeholders, and also regulators that ISR works in the basin, will you focus on using this technique on other projects?
Well, Jimmy, yeah, we do think that the application of ISR Mining is in the Athabasca Basin goes far beyond Phoenix, and we are focused on looking at deposits that we already control or have an interest in to bring ISR Mining there. And we started in 2020 with what I'll call sort of a proof of concept PEA study on the Waterbury Lake property to assess whether a smaller sized Athabasca deposit could be economical if extracted using ISR Mining. And the results of that PEA were very positive. And so, that is a project that quite reasonably we'll be looking to revisit now that we've done some more de-risking at Phoenix. But also, and something we're pretty excited about, is the potential to use ISR at a project that we have joint ownership with Orano. This is the Midwest joint venture. So we're the minority partner there. We have a 25% interest. But during 2022, we worked with and for the joint venture to actually carry out some internal scoping studies assessing the application or potential application of ISR at Midwest. So that's something that we're pretty excited about. Certainly have more work to do with our partner there before we can comment more on that. But it gives you a good sense that we are really turning to the other deposits in the region because the success we've had at Phoenix is really giving us confidence that this mining method can work for certain deposits in the right geologic setting.
And David, another milestone was the metallurgy and recovery rates. What were the recovery rates and how is this significant?
Yeah, Jimmy, so we've talked about the feasibility field test. That was a big accomplishment for the year, but almost equally important is some of the long-term core leach testing that we were doing with ore samples that we recovered from Phoenix. And these are in situ recovery specific leach tests. And we put out news in December talking about a test that we had run for over a year. So an intact piece of core recovered from the ore body that we ran in a specialized piece of equipment that only allows the leaching to occur by moving through the natural permeability of that core. So no crushing, grinding, no agitation. This is as it would leach in the ground. We ran this core sample for over a year, and we achieved over 97% recovery. And almost equally important here is that we had an average uranium-bearing solution head grade from that year-long test of over 18 grams a liter uranium, which was very important because it supports our feasibility study, where we're using an assumed 15 grams a liter uranium head grade, which was a 50% increase from our pre-feasibility study. So that test really helped to demonstrate that when we make contact with the ore body with our leach solution, we can achieve some very high rates of recovery. Now, it's not to say that we'll run a 97% rate of recovery in our feasibility study, but it definitely gives us great confidence that we can achieve the industry standard recovery rates necessary for the project to be economic. Now, that all layered on to other testing we've done in the metallurgy around the plant. And I just want to tack that on, if you will, but you know, a lot of our work has also been on designing our processing plant. And so we've gone through a whole bunch of bench scale tests on our processing plant. And another important metallurgical milestone in the year was that we were able to prove up our process to produce an in-spec industry standard yellow cake from uranium bearing solutions recovered from our cores at Phoenix. And we did that using a simplified direct precipitation method, which is important because that's how we modeled it in our PFS, but also we did it without needing to use calcination, which is an important detail from a cost standpoint. We are not and have not been designing our plant to include a calciner, and we were able to achieve that in-spec product without having to go to calcination.
We've spent a lot of time about what's happening at Phoenix and the success that you've had there. Give us an update on what's happening at Griffin.
Well, look, Griffin is, part of the story. It's an important part of the story at Wheeler River. We are also updating the technical report for Wheeler River for Griffin. And so, when we look into 2023, the feasibility study for Phoenix, as well as an update to the pre-feasibility study for Griffin, those are both important milestones in 2023. And with Griffin, look, it has not been our focus. We are focused on Phoenix, and we've had a project plan from the PFS that showed a staged development plan, with Griffin coming as a staggered development decision to Phoenix. But we're actually quite excited about the whole update to the technical report, including on Griffin, because now we get to recast things with current costs. We've seen inflation affect a number of mining projects, and we know that our technical report was last issued in 2018. And so Griffin will be an important part of the narrative for us to update those costs, but still remains an important part of our company when it comes to the long-term viability of our company and the ability for Phoenix to generate cash flows that we can redeploy into a growth asset, Griffin, and produce pounds for longer than that Phoenix mine life, and into a uranium market that really needs the pounds beyond 2030, which is where you'd see Griffin slot in terms of a development timeline.
David, another element central to de-risking is moving forward the permitting process. You submitted the draft EIS for the Wheeler River project in Q4 of 2022. Let's discuss the timeline associated with this.
Yeah, Jimmy, well, since submission of the draft EIS, our work has been focused on preparing for the public comment period. So that's the first sort of phase that followed the conformity review, which we passed, meant that we had submitted all the necessary elements to be considered by our federal regulators in the province. And so we're waiting for responses from the public comment period, and that'll really start the process of back and forth on review and comment and changes or updates to the draft EIS as we work towards getting a final EIS that's ready for regulatory approval. Now, that process we expect will take time, and so we are handicapping that this is a 2 to 3 year type process if we go back to the submission of the draft EIS before we're in place to have an approved final EIS that's gone through the CNSC.
David, another asset in your portfolio, which I would like to discuss, is the Waterbury Lake project, which is not as advanced as Wheeler River, but it also has ISR potential. Can you just take us through this project and the progression that you and your team have been making there?
Yeah, Waterbury is a really interesting case. This is a project we own about 2/3, and our co-owner is the Korean nuclear power company KHNP. It's part of KEPCO. and they operate all of the nuclear power plants in Korea. You know, we looked at this project in 2020 at a PEA level for ISR Mining, and in some ways I found it to be more impactful than what we had done with Phoenix, in that the project itself is smaller than and lower grade than Phoenix. And so you're talking in the range of 10 to 12 million pounds at 2% for the THT deposit at Waterbury Lake. Now it's sandstone hosted, and so that's the part that makes it amenable to ISR mining. And we really wanted to test, can the breakthrough on ISR mining turn a deposit like this into something that's economically viable? And the results from that PEA suggested that the mining method can do that. And now we've got a project that doesn't look that different from some of the US ISR projects in terms of scale. So again, we're forecasting more like 10 million pounds of production over 6 years. That's similar to what you'd see at some of the larger US ISR assets. Cost profile coming out under $30 US per pound, which makes it very competitive globally. Of course, we wish we had more pounds there, but it's the kind of project that really does compare well against the smaller scale assets in the US. CapEx in the range of $120 million Canadian. All of these things sound very familiar to those US ISR assets, but they're in it's in the Athabasca Basin. So we're excited about where that could go, given the de-risking we've achieved at Phoenix. Certainly makes sense that we would go back and revisit the project plan for THT as an ISR project for the next several years. And it's something that we're excited to turn to.
So you mentioned that you would like to have more pounds at Waterbury, and that's a good segue into my next question, which is exploration. Do you have any plans to do any further exploration at Waterbury?
Well, Jimmy, exploration, maybe not so much at Waterbury in 2023, but exploration is still a key part of our DNA. And I would say that we're actually a bit of a sleeper story on exploration. I mean, rightly, we focus on Phoenix, the ISR de-risking, the Griffin deposit, Wheeler River and Waterbury and McClean Lake and all of those core assets that we've got. But we actually spend a pretty liberal amount on exploration in 2022, and our plans for 2023 will probably look similar. And so we are focused on primarily searching for ISR amenable deposits. And now that's not quite swung back to in favor in the region. Most people are still looking for basement hosted deposits. But we have great confidence with what we've done with ISR that our exploration focus has swung to ISR amenable deposits for the last several years. And so our budgets, when you sort of stack it up against the juniors in the space, we probably have one of the largest exploration budgets in the region. We just don't talk about it that much. We don't put out every drill result. We've got mineralization that we're drilling that we don't often put out a news release, because for us, the threshold of that is bigger. We need to have something that we believe we can turn into an ISR deposit before we get too excited about it. But yes, we do have a continued focus on finding additional ISR amenable deposits in the region, absolutely.
It will be interesting to see if other operators also try out ISR mining techniques, given the success that you've had.
Well, yeah, look, Jimmy, I think in the fullness of time, we will absolutely see that. And we already have that trend a little bit opening up with our Midwest project with Orano, where we're doing that concept study together with the joint venture to assess it. But in fairness, I mean, the confidence level on the ISR mining is not universal across the basin. We've spent thousands of hours and millions and millions of dollars over the last several years carrying out this de-risking. And really only our team has the knowledge that's come out of that. And only our team has the confidence that's come out of that, because we've seen the results tangibly from our test work. And so I think it's actually a bit of a competitive advantage right now, that our confidence and our knowledge around what it takes to be able to actually develop an ISR amenable deposit in the region puts us in a position where we really are leading the world for ISR in the Athabasca Basin, and our ability to assess projects is far advanced over anyone else in the industry. And so I'm optimistic in the fullness of time, everyone gets there, but I'm also really encouraged that there is some hesitancy still, and it's creating a big business opportunity for us.
David, let's move on now and discuss your balance sheet. Maybe you can tell us how much cash you have and how you will allocate that cash in the coming year.
Yeah, Jimmy, look, we're really well capitalized. We've got working capital and investments over $224 million Canadian at the end of the third quarter. Now, of course, we're approaching our year-end reporting, so everyone will get a fresh view of our balance sheet when our year-end financials and MD&A come out. Healthy cash position, and of course, a large holding of physical uranium, 2.5 million pounds of physical uranium on the balance sheet. So we do have an ATM that is up on our base shelf prospectus that we use selectively, but really have all the tools we need in the toolkit to stay well capitalized and avoid any sort of significant, major dilution event in the near term.
David, Cameco came out with a massive quarter, adding an additional 80 million pounds in long-term contracts, which included a contract with Ukraine. And I'm curious to hear your views on this and where you think the term market is going.
Yeah, Jimmy, those results, and particularly the announcement around long-term contracting from Cameco, is incredibly bullish for our sector. Look, I'm really optimistic around the way Cameco is managing the market. They continue to apply a level of production restraint, while at the same time shoring up their long-term business through contracting. And I think it's quite reasonable that we've seen a bit of a plateau in pricing, because Cameco is making and others are making a fair amount of supply available at these levels. But I think what's so bullish about it, and maybe it is really driven by that Ukraine announcement, is to think, here's one contract with one customer that has a total of as much as 67 million pounds U3O8. Well, let's put that into context. That's more than we're projecting for production from the entire Phoenix deposit. Now, we've been working for years to advance that, and it's a core to our business, but in one contract with one utility, that many pounds has been spoken for with Cameco. Now, there's a lot more of that to come, and it really does drive home that once Cameco has shored up that baseline in their contract portfolio, they have the ability now to be more selective. And I think that's the window I see I'm looking through in terms of what will happen with price going forward. As Cameco is more selective with their contracting, we have the potential to see the term price, spot price, re-rate upwards. And then it really drives, well, where are the other projects coming from? And what are their cost profiles? Because if you need all of Phoenix and you still don't meet that one contract demand from Ukraine, well, what about the next project? And what's their cost profile look like? And what is the real incentive price? Now we're getting into some really meaty supply-demand discussions that'll be driven by the cost profile of the projects, rather than where we've been over the last several years, which was price discovery driven on inventories. So I think there's really a lot of good reason to be excited about what we're hearing from Cameco and around the uranium market.
David, as we wrap up, we started this conversation by what you accomplished in 2022. Can you summarize for investors what they can expect in 2023?
Yeah, Jimmy, the key in 23, if we want to say that, is the feasibility study for Wheeler River for Phoenix and the update to the PFS for Griffin. So that is critical for us. Our team is hustling, working on that right now. We are still on track for completion through the first half of 2023. Look, this study gives us a current view of the project in the current market. We're talking the uranium market, we're talking the supply chain, all of that, so we can reflect the current cost of this project and make informed decisions about moving forward. From there, it's accelerating with detailed design and engineering and that permitting process, moving in parallel so that when we are through that EIS and permitting process, we are positioned to make a development decision and get those pounds on their way to coming out of the ground. So it all starts with the feasibility study in 23, And you'll see that our team is really focused on that. I think you pepper in some other positive news and developments around exploration and other projects that we might be looking to advance with ISR, and all together makes just for another really exciting year for our company.
Well, David, that was a great update on Denison Mines, and we look forward to the pending feasibility study on Wheeler River. Once again, thank you.
Thanks very much, Jimmy.